Stocks are rallying on some optimism over the trade war between the U.S. and China. Let's talk about where this market might go from here. Joining us this morning, Ed Yardeni is with us, Yardeni Research President. Ed, good to have you with us. Welcome once again.
Thank you.
You've tried to maintain a modicum of optimism in the face of these 1,000-point swings and these tariff headlines. How are you feeling today?
I feel like I need a neck brace. The volatility has been insane, but I feel pretty good about things. I think that the economy is going to prove resilient. There's going to be some volatility in the economic data up ahead here. We're certainly not out of the woods of the consequences of this tariff war. And the tariff war isn't over. What's really happened is that we had some extraordinarily pessimistic sentiment in the stock market, and I think those vibes got to the White House. I think the White House blinked. I think it's pretty clear that between the bond vigilantes and the stock vigilantes, that the White House understands that they can't take too hard a line because both markets will fight their intransigence.
Right. You think 4.5 on the 10 is the pain threshold?
Well, I've been thinking 4.5% is the normal bond yield. I've been thinking that 4.5% is where we were before the great financial crisis for several years. And so I think we're at normal. Normal is what the economy has been able to deal with quite effectively. Normal is properly allocating credit in the capital markets. So it's been amazing how calm the bond market has been in recent days, despite all the panic about the basis trade blowing up. It's kind of like what happened when the carry trade blew up. You know, it blew up for a day or two, and then the bond market kind of settled down and quieted down.
I did love your note last night, Ed, where you looked at the DXY and said you're not buying this notion that people are saying goodbye, farewell, that it's actually in a pretty steady channel going back to the financial crisis.
Yeah, I guess, I don't know what it is about panic, but panic has been in fashion, and rightly so. I mean, there's been a lot of noise and inconsistencies coming out of the White House, which hasn't helped. But with regards to the dollar still is on an upward trend that started back in 2010, right after the great financial crisis. The market started to figure out that the U.S. was doing a better job of restructuring its banking sector and kind of healing from the great financial crisis. I think we did quite well, all in all, during the great virus crisis. The dollar again remained strong. We've basically seen what looks like a 10% decline in the dollar, but actually it's not that bad. If that 10% is in the so-called DXY index, a much broader trade-weighted dollar index, one that's calculated by the Fed's down about half as much. Anyways, I don't think the U.S. is about to implode and lose its reserve currency. I don't think American exceptionalism that was so prominent only a few months ago has suddenly blown up. I think America has the world's largest and most liquid capital markets. How could we not be the reserve currency?
Mm-hmm. Yeah, I wonder about that, Ed. It's Sarah. I'm here in Washington at World Bank, and we just had this conversation with the World Bank president about how he's encouraging developing economies to trade more with each other and sign trade deals with each other and lower their barriers. It's something that the ECB president yesterday told me. They're encouraging intra-Europe trade more and to lower barriers. Does all of that make ultimately, if that is what comes out of that, does it make the U.S. a less attractive investment destination if we're not as part of global trade and they open up more with each other?
Well, it's always nice to have a nice house in a nice neighborhood. And if the world is going to trade more, it hopefully will be a more peaceful world. There'll be more interdependencies. And I think at the end of the day, all this trade war is going to lead to is actually lower tariffs with fair trade. So I'm still optimistic that that's the end game of what the White House wants to achieve. They've got, of course, some other conflicting goals with regards to that, but they clearly want to also have national security issues dealt with regards to tariffs. They're not going to give up, I think, on steel and aluminum. I don't know why we need tariffs on autos, but there are some national security industries that we do want to make sure we produce here.
Hey, finally, Ed, I know it's just one day, but I am curious to get your thoughts on oil, which even in this tape has been unable to catch a bid. We're still below 62. Yeah. You think there's some scarring from all of this that'll manifest itself in the way of activity?
Well, I think the big problem for the oil market is there's lots of it, and the demand has been weakening, especially out of China. Not only is China's economy fundamentally weak because of the bursting of their property bubble, but they're all driving electric vehicles. They just need less gasoline. So I think it's a combination of a weak China, a China that's becoming more energy efficient. And that probably explains, I think, why oil is remaining low. And by the way, that's a big positive for U.S. consumers, for other consumers around the world.
Yeah, absolutely. And for the inflation prints we'll get in the weeks to come.
Yeah.
Ed, thank you. Always good to check in.